This is Manish. Do you know what's most interesting about trading? Like almost everyone who comes here is looking for a secret formula. Some buy signals and some believe that somewhere on the internet there are correct indicators and something that it's all about luck or lucky moments. But the longer I trade, the clearer I understand that there are no secrets. There is a structure, there is a repeatability, there is a human behavior that never changes. And if you learn to see it, profit becomes not a coincidence but a logical consequence. Today, I am going to tell you 4 key secrets that are rarely discussed publicly and show you strategy that works out because of magic, but because of market logic. So if you're ready to hear the honest side of trading, watch until the end. Today, I will show you a strategy that I use all the time, CC plus and fractals. CCI shows how far the price has deviated from its norm, and when it is above 100, the market is overheated. When it is below minus 100, the market is actually oversold. So this is an indicator of emotions, greed and fear. Fractal shows the actual points where the price has already changed the direction. So this is not a fantasy, and this chart traces left by the market itself. And here's a secret, when the CCI shows overheating and fractal appears in the same zone, it's not just a signal, it's a confirmed market reaction and a place where large capital has already reacted. So on EUR/USD, there is a fractal at the top and the CCI is above 100 and starting to decline. This is not a maybe, this is a place where the market has already shown weakness. I enter downwards and 3 candles keep a clear impulse. So if the fractal from below in the CCI is coming out of our oversold territory, the market is ready to turn upwards. And it's simple logic, but many ignore it. By the way, this is the exact mechanism built into my AI bot, and it analyzes fractals, so looks at the CCI and status and only gives a signal when the parameter match. If you want to test it, here's the link in the Telegram below the description. Most traders believe that the market moves on basic technical analysis and levels and correct patterns. But in reality, every impulse and every abnormally long candle, every breakout is a reaction of people, their emotions and their expectations. So when the crowd sees a strong green candlesticks, they think, wow, the trend has started. But this is just a moment when someone has gathered liquidity and pushed up the price, taking advantage of the fear of missing out. And on the moment, at that moment, almost all beginners go along because they think the trend has started. So, but the professionals understand a different mechanism, and the market moves not because it's time, but because someone is putting pressures on the market or conversely removing pressure. That is why indicators such as CCI and the fractals help to see the true reaction. If the CCI sharply moves to an extreme value and a fractal appears above it, it means the crowd is overheated. Players have bought in on panic and large participants in simply taking profits. And the price is preparing for a reverse move. This is not a guesswork, it's just knowledge of crowd psychology. A real reversal almost never starts with the large candlesticks, and the biggest mistake beginners make is thinking that a reversal begins with a candlestick that nicely changes directions. But in reality, a real reversal begins quietly. So almost like imperceptibility, small shadows, weak candlesticks, and loss of momentum, slow declaration. And only then does a large candlesticks appear. But this is already a consequence, not a cause. That this is, if you see a huge candle against a trend, it is not the beginning of reversal and it is the end of it. So because this candle represents the movement of those who are late and trying to jump into the trend, at least at movement. So fractals appear perfectly and illustrate this logic. There's always a series of weekend candles because a fractal, the price makes micro stop and only then the indicator draw a reversal point. If that is the movement of CCI reverse from the extreme, it means the momentum has really ended. A real trader enters when the candlestick is beautiful, but when the market quietly shows weakness. That's the whole secret here. Most traders try to find a perfect entry point, but the key to stability is not the entry, but the filter. So if you remove all the market noise and leave only the movements when the movement is logical and clear and confirmed, you already have 70% of the results, and filters are distinguished a professional from a gambler. And CCI plus fractals work as double filter. So the fractal shows a specific point, like where the price is already reversed, and the CCI confirms that the market is overheated. That is, practical is equals to logic and the CCI is equals to market condition. Together, they cut out like 80% of your unnecessary points where the price moves chaotically and without structure. And the most interesting thing is that these filters are the basis of my AI model. It does not look for an entry point, it excludes moments where the probability is low. This is what makes it accurate, and it waits until the market itself shows a signal rather than trying to predict a moment. It is a filter that brings profit, not the buy or sell button. And a big move never starts suddenly. The market always leaves traces and small inconsistencies in candlesticks, change in angle and rare trails in the right places, lack of volume in momentum, and changes in behavior at levels. So fractals like capture this micro turning points, and the CCI shows emerging overheating. When these two coincides, most of the work is already done. Like for example, the price approaches the level a fractal appears from below, and CCI begins to rise from the oversold zone. This is not just a signal, like it's just a sign that a major player has started to build a position. Beginners don't see this and they just react to the final movement. But a professional read these signs, a small pause and a practical change in CCI. The early stage of momentum, when the moment like starts to accelerate, it's like already in. Not because of luck, just because of like attentiveness. And yes, some fresh news that perfectly illustrates how crowd has been overheating works in reality. Yesterday, US released inflation data for October 2025 and the figure was lower than expected. Like this triggered an instant surge in the purchase of dollar pairs. The crowd decided that the dollar was about to take off, and the GBP/USD chart looked like this is the candle shot up. The CCI broke through like plus 220 level, and a few seconds later, a fractal appeared. It wasn't a trend, it was an emotional outburst, and literally 2 minutes later, the market crashed back down, completely reversing the momentum. And in other words, people bought on emotion. While large capital used and surgeon as an opportunity to build position, who made money? Those who saw the CCI overheating and understand that such a spike was not a continuation, but noise. That's why indicators are more important than the headlines, and the market always shows the truth through the structure of movement. I don't believe in trading secrets because they only exist in the world of marketing. But I believe in systems like repeatable human behavior and tools that help you see where the market is overheated and where it is ready to move. Like CCI and fractals are just such tutors. They don't guess, they just show logic. And if you want to learn how to read the market without illusion, check out my Telegram. There you will find strategies, analysis, and access to my AI bot. Copy trading and everything I use myself every day. Like, comment, and remember, the market doesn't lie, it just speaks softly. So learn to listen and stability will become the norm, not a dream.